Alright folks, so today we're starting one of the most fundamental questions if you want to start a business in the United States. What kind of entity should you choose for your business? Because there are so many options. Sole proprietorship, single member LLC, LLC, the limited liability companies, and corporations, S Corp, partnerships. Well, it seems pretty confusing. And it seems like a very, influential choice that you choose at the very beginning when you know so little about this business. And the reason that it's very influential is that it can influence so much of your business. For example, you can, choose an entity do affect your tax as well as your liabilities. And you, of course, you can even, greatly limit your flexibilities of doing your business if you choose the wrong entities. And you can greatly improve and increase the flexibilities of your doing business as well as the tax options. And of course, if you're aiming for growth, for long-term growth, choosing the correct business and entity type is very, very important. But if you think about this, you're just start your business. You don't know a lot about that business. So it seems that it's weird to choose an entity at this early stage and it got so much more consequences. Don't worry, I'm going to quickly go through it and we're going to dive deeper into each of the business entities. Right? So let's look at the option here. Right? Business entities. So we can get the sole proprietorship, we can get the single member LLC, and remember, single member LLC is pretty similar to the sole proprietorship, so I will just put them together. But if you put down below, we can see the limited liability companies, LLC. Okay? And of course, we got all kinds of corporations, the C Corp corporations as well as the S corporations. Okay? And of course, partnership. So since we are doing business, I trying to explain this in two kind of perspective. Okay, let's just quickly go through this. The first perspective is the liability perspective. Okay, you don't want your own money, right? For example, you buy a house, right? Under your name, you don't want your house to be sold because the creditors, right? Because if, God forbid, your business failed, then your creditors will say, well, there is your house, I will go after your house. You don't want to do that. You don't want the creditors to go after your house or your car, all that. Okay? You want to keep your business, your venture, right? We call that name for a reason because it's risky. You don't want that kind of risk to affect your own personal wealth. Okay? So that's the first, right? The first road that we are going to consider. It's called owner's liabilities. Okay? You don't want the liability to be huge. That the risk is just too much to handle. Okay? That's one road that we could walk through. The other road is called taxations, which is our profession, right? Taxations. So you choose different entities do affect how you're going to be taxed. Okay? And remember, there is a saying that there is only two things can't be avoided. One is death, the other is taxation, right? So if you're doing business, you're actually engaged in the economy and you will be taxed. Okay? So different business entities do affect how you're going to be taxed. Okay? Whether you're going to be taxed, at the individual level, or you're going to be taxed, at the corporate level, maybe double taxation, or maybe you want to avoid that. Okay, so that's the basically two kinds of, facets of this problem that we're going to tackle. We're going to consider two roads, right? All lead to the same goal, same conclusion, because you're going to choose the correct or should I say more suitable entities for your business. Okay, so let's go through this. The first, sole proprietorship, right? Sole proprietorship is you know, if you just start your business, under your name, right? That's most likely just the sole proprietorship, right? And remember, this is the very, very starting stage of the business, and you're just testing water, okay? So you don't necessarily need to add a lot of burdens in the taxation kind of terms, because you just like do business, like you do business, you the individual doing the business. So that's the sole proprietorship, okay? And remember, that means that you personally, your individual, is going to, dealing with all the taxation. So sole proprietorship, the taxation point of view, flow all the way. Not like there's like no sole proprietorship level of tax, but rather flow all the way. You're the owner, right? You are that sole proprietorship, right? You are that solo person. You are that individual. So the taxation flow all the way to you. Okay, that's one thesis down. The other is the liability. Okay, remember, this is a very early stage. If you're just testing water, right? If it's a low risk business, you can quickly do that. But as I suggest to a lot of my clients, if you're just starting to earn money, right? You are strongly encouraged to change that business entity into LLC at least, okay? Because the owner's liabilities is also unlimited liabilities. That means that if this sole proprietorship failed, or you lose in some court, you are going to be vulnerable. All the asset, your individual asset that you own will be vulnerable, because it's the unlimited liability. Okay, they can go after you directly. So it's easy. Oh, of course, there's like a plus side is that it's pretty easy, right? You're not a extra burden to you, right? For example, the taxation point of view, you report tax, so proprietor report tax individually. That's fine. You don't need to do like two tax forms, right? It's just to do your own tax, okay? But it got a huge, disadvantage in the liability point of view, as well as the anomaly kind of view. Some of the client, especially wealthy client, got a very focus on this should hide their information as much as possible, okay? And there is a saying in the in the law field is that you can't sue what you don't know, okay? So there's a lot of if you own certain things and you don't want to expose yourself to the public, you can later do that. But sole proprietorship, you are actually using your own name, doing the business, okay? So that means that you are vulnerable to attack, okay? So that's the sole proprietorship.